Good evening and welcome to another edition of the ShadowTrader Video Weekly for Sunday, January 10th, 2021. You're probably noticing this link down below me. It's the link for the free trial to the weekly options advisory all next week, January 11th to January 15th. I'm really excited about this, and honestly, I could not have made it any easier. It's really just that link. I don't need your credit card. I don't need you to sign up for anything. I don't even need you to make up a password. Literally, it's all just open, free for everybody. Free.shadowtrader.net is the link down below. When you get there, you'll see this countdown timer, which shows you when we're going to start, which is at 9 a.m. on Monday. So if you get this screen here, you've done it right. And there's plenty of resources there as well. Once you're logged in there, you'll notice that there's going to be instructions on how you can download our mobile app. So if you want to get my alerts straight to your phone to give it a test drive to see how that feels, you'll be able to do that. There's also some PDFs in the Room drive uploaded into the Room about how to understand my alerts, etc. So hopefully everything has been set up for you guys, and I'm really excited for everybody to join us. Once again, that link is free.shadowtrader.net. It's right below me. You can go there at any time between now and then, and it's going to be available all next week. In addition, I will also be giving out my Peter's Pre-Market Perspective Report for free all week, which goes along with it. All weekly options subscribers get that report daily. It's always included. So if you enjoy some of the market profile discussions that I have in these videos and you want to check that out, that's going to be included all week free as well. All right. So again, free.shadowtrader.net. I hope to see you there. As far as this week, what are we going to talk about? Well, markets at all-time highs after a spate of, I want to say volatility, but not really crazy volatility. I mean, we saw markets back off a little bit in a number of more liquidation breaks as opposed to stronger selling, obviously on the heels of news all week, especially with the unfortunate events in the Capitol around the middle of the week. So we're going to take a look at technicals where we're at, all-time highs in the S&P, all-time highs in the NDX, all-time highs in the Russell. We're going to look at all that stuff, see where we might be going next week. Slightly overextended, I think, just on the dailies. You know, we had a few days in a row of upside. I want to also take a quick look into sectors that are driving the S&P. There's 11 major ones. So, you know, it's like the information technology and communications and materials and all that stuff. We're going to take a look at just those 11 sectors and see if those can give us some clues as well as to what further direction may be. And of course, as usual, we're going to take a quick look at Fangman plus T. Tesla's been absolutely on fire. I don't think it's a buy at this point. I think it's a great day trading stock, but I don't know really where the buy point is right now. It would need probably a 20% correction at this point. But a lot of the other names are all going to be coming into that pre-earnings period, which is usually very, very bullish. And that's interesting, right? Towards the end of this month, we're going to start to see Apple, Amazon, Netflix, etc., all reporting. And like I said, usually a lot of those stocks have bullish runs moving into that period. So we'll look at those charts as well. All right. Without further ado, let's get into it. All righty. Let us begin with the S&P. We'll just leave it on the daily here. And let's just get a nice pretty color here that we can draw with. I feel like Bob Ross sometimes when I'm, we can just, let's just put a nice little trend line here. You know, trend lines can just sit there. You know, we can just put a nice little trend line there, right? That's what Bob Ross, I think, would have said if he was running these videos. Anyway, obviously breakout to new all-time highs. Possibly slightly overextended on the daily. You always have to consider the distance from the 20. It's just such a simple, stupid thing, but I think a lot of people ignore it. But distance from the 20 does matter in terms of honing entries. So like, for instance, you can see here that we actually ride the 20 for a long time before testing it. But it's at the point when it's most overextended from the 20, when the distance is the greatest, which would be right here, that you simply, should wait to get a better entry. Notice that prices are here, but there's better prices to be had down here. So we're getting a little bit extended, I guess. So what's the high? This is recorded Friday, so the high was 38.26, and over here we've got 37.17. So it's over 100, right? That's decently overextended. So just something to keep in mind. But obviously, in the bigger picture, there's nothing really bearish to consider here. Let's look at NDX. Again, new all-time high, not a lot to talk about there, looking just fine. Russell as well, which has just been on fire lately, only came into the 20 and rallied from there. slightly overextended as well. I would look for any pullback in the rut to potentially be buyable. Let's take a look at some of these sectors that I was talking about, alluding to in the introduction rather. Remember, there are 11 sectors that are part and parcel of the S&P, making it all up, basically. And I'm just looking down at my sheet here where I have all of the percentages. The ones you really want to pay attention to that make up the most of it would be healthcare, for instance, 14.2%, technology, 28.2%. They call that infotech. Industrials, 8.3%, financials, 9.7%, communications, almost 11%, 10.8%. So these are some of the ones that are really making up a lot of it. So let's just look at that XLK first. This is that technology sector, and I think it looks just fine. I'll look at dailies and weeklies. There's potential for a little bit of a hanging man here in terms of that hammer. And remember, I always say that these types of candle formations are important on the weekly, but I don't pay very much attention to them on the dailies. But remember, wherever you see shadows on the longer time frames, like on the weeklies, that is really a tell. It's really, really important to look at these shadows on these weeklies. But again, for now, I don't really see anything really that's all that bearish, unless this was construed as a hanging man. Probably has to be a little bit higher, I think, that to be a true hanging man. Some of you that know your TA better than me, you may want to see this hammer higher, which I tend to agree. Notice that the tech sector didn't even make a new high actually this week. So you can kind of look at that both ways, is that it's really truly not a hanging man, but it's also not as overextended as one would think, or I should say, that it could be, or as the people might think that it's overextended. So this sort of upward grind in tech could certainly continue a bit longer. Let's look at XLY. This is consumer discretionary. This was a breakout week for it, which is interesting because you had this clear resistance here that was kind of like a straight line. So I wouldn't bet against this sector. This is kind of like day one of the breakout, but it's really week one of the breakout. And when you think of it in those terms, and the fact that this makes up 11.6% of the S&P, you have to think, okay, that's kind of falls in the camp of, well, this rally could go further. Let's look at some other heavy hitters. This is healthcare, which is 14%. Again, you could think about it as week one of the breakout, right? Because you've got consolidation, a number of weeks where he just went sideways, and then this is like actually the first week where it just started to take off a little bit. All right, again, just keeping with the heavy hitters, the one that make up the greatest percentage. This is communications, kind of going nowhere, but certainly more bullish than bearish. Let's look at XLI, which are industrials. Not yet breaking out. I look at stuff like this as bullish because it has the potential to break out. And what happens is these then become the fuel for the S&P to move higher, because it's that passing of the baton effect where you have sectors that are lagging then become sectors that maybe may not be leading, but might be rallying while others are pulling in a little bit. Sort of that, again, passing of the baton, I think, in a track meet type race is the best way I could describe it to you. Financials, really interesting week, because notice that they rallied hard, certainly a big weekly advance. But here's where it gets really interesting. They haven't yet broken out of pattern. So what does that tell you? These stocks could easily go higher. I mean, if you have this pattern and this move here is 100% of the down move, correct? Well, I'm a big believer that 100% moves usually don't fail like that. Usually it's not going to go like this and come back down. It's probably just going to back off a little, bubble under, and then you'll have a little bit of a move to the outside. All right. That's about it for the heavy hitters. The other stuff is like energy and utilities and things like that. We'll look at some, actually we will look at that because I want to point something out. The fact that utilities are lagging here, where if you look at what this pattern looks like in relation to the S&P, that's bullish for the market. It's clear just by looking at the chart that utilities are underperforming, okay? It's just noteworthy. So keep that in mind. When this is, rallying with the S&P, that's kind of a risk-off sort of sentiment. You don't want to see that. But the fact that they're lagging is good. And another one would be real estate, and I think it's also kind of lagging. Notice that the real estate sector is just kind of slumping like this, not going anywhere. Real estate is 2.6% of the S&P, and the utilities are 3% of the S&P. And then last but not least, I'll show you energy. Even though, believe it or not, and it didn't used to be this way, but energy is only 2% of the entire S&P. But even that, too, you know, and that's interesting because remember the S&P is cap weighted. So it just used to be that you had stocks like ExxonMobil, for instance, that at one point was the richest company in the world or the most valued company in the world. But technology has taken that over. So now with all these energy companies in terms of their valuation being left in the dust, you have a sector that doesn't really carry much weight anymore in the S&P. All right, but that being said, even clocking in at only 2% of the S&P, do you think that this is a more bearish pattern or a more bullish pattern? I would say it's a bullish pattern because you have a clear double bottom, nice bounce, and after that, you're not falling back for a triple bottom, you're going sideways, and it looks like you're about to break out. So potentially, they'll be up here. And again, more, just talking about that in relation to the whole passing of the baton type of situation, which could, I think, power it higher. All right, let's get into... let's do a little bit of market profile before I get into Fangman plus T. I definitely want to talk about some trade setups that are potentially brewing on those stocks. But let's look at the market profile and see what that's telling us. There's a number of nuances I want to point out to you that I want you guys to carry forward. It would be nice, it would be really nice if all of you were with me every morning, at least on the pre-market perspective, which, shameless plug, is only $1 a day. And I could write you a whole report every morning at 9 a.m., a half hour before the market opens, like I do every day, telling people what is all of the market-generated information they need to be thinking about for that particular day, what are the potential key levels and potential scenarios of the way the day may play out, right? That would be great if all of you could join me. But if you can't, for whatever reason, I urge you at the very least to watch these videos on the weekends and sort of jot down some of the market-generated information that I talk about and carry it forward in your narrative, because it's very, very advantageous to you and I think very, very valuable when you have this narrative that's really under the hood, so to speak, that a lot of people don't think about, don't know of, when the rest of the world is just looking at this narrative. So you have everybody else who's not paying attention to market profile. They look at this as a narrative, as an ongoing narrative. They say, oh, well, we're in an uptrend, right? That's the ongoing narrative, and it goes up, up, up. And this day was green, and that day was green, and we had a little pullback here. And it's really very two-dimensional, which is fine. There's plenty of, obviously, great analysis you can do with just charts, but it's only the price and the volume, and it doesn't take into consideration the factor of time. And that's what makes the market profile so special, is that this distribution, for instance, for Friday, obviously has the same O, H, L, and C to it that a candlestick chart does, right? This is your high, and this is your low, and for some reason the close is not showing. Oh, this is your close. I apologize. Yeah, at the high, I almost forgot how bullish it was. The red rectangle, right? And somewhere in here is the open, which the only reason I can't see is because it's too small. If I make it bigger, you'll see the green circle right here, and that's your open, right? So all the information that's on the candlestick chart is in here, but the difference is the letters going across show us how much time was spent at each particular price. So that tells us a lot in terms of some of the market-generated information that we can carry forward, because, for instance, on Thursday and Wednesday, both days were P-shaped distributions, right? Notice that this looks like a small case letter P. And the small case letter P always has this sort of little post on the bottom, which is indicative of lots of emotion and short covering. This is not the type of buying that's sustainable. So if prices ever get too deep into this area, and at some point they will, you can imagine that these buyers will probably liquidate. So that's one thing to know about. But what's noteworthy about this week is you have 2 days of that back to back. Look at how long the post is on the P formation here. You actually open down here at the green dot. I know it's kind of tiny. Maybe you can open it up to see it. Okay? And then you just ratcheted higher on Wednesday. So same thing. So this is an excellent example of market-generated information that you need to carry forward, basically. That's the way I look at it. You want to carry forward in your narrative. So you think to yourself, yes, the market's bullish. Yes, we're at new all-time highs. But how did we get there? How much time was spent at each particular price level? Was the profile filled out nicely going across, or was it messy in any way? Were there anomalies? All of this stuff really matters basically when you take it into consideration. So these are just things to look at. All right. Beyond that, value is clean to the upside, and I would have to say that is bullish. You have a break here. When I say clean, means that it's not overlapping the prior day. So break to the upside and then overlapping to up on Friday looks pretty good. POC was up here. The fairest price to do business migrated up. This was kind of an interesting day because the POC was kind of wide, so it was kind of like a rally and then pause. But overall, things look pretty good. I would still continue to carry forward that the fairest price to do business, time-wise and volume-wise, never migrated higher on that day, and it's still a virgin point of control. So that 37.40, of course, if you're looking for a larger move to the downside, would be something that you would carry forward. That's just how you look at it. You carry forward these different areas where there's potential of the market revisiting. All right. All right, let's get into a little bit of Fangman plus T, my favorite stocks. I've left this on the weekly for now. This is obviously Facebook, which would be the starting point for Fangman plus T. This trend line no longer exists, but this trend line does exist. And I think it's noteworthy that the stock is showing a lot of relative weakness. If you just connect your lines right here, notice that here you don't even make it to the trend line. And here we're so far away. So think of the S&P and the NASDAQ 100 at new all-time highs. And this is nowhere near it. And notice how in the last few weeks you haven't really moved. So the stock is just really in a holding pattern here. I would say there's really no specific play here at all. There's nothing really that you want to get involved with here until it shows its hand a little bit firmer, right? Let's take a look at Apple. Apple was interesting on the weekly because you have opposing tails, which are always noteworthy, where notice that, and once again, I reiterate, when you see the weekly hammer, it's important. So watch your weeklies for the shadows. The shadows are always important on the weeklies. Again, I don't pay too much attention on smaller time frame, but look at this one here. Boom, and it starts to go, right? Look at this one here. Sets up the move to the downside. So this is kind of interesting because they're opposing. So you have to think to yourself, well, which one do you follow? So obviously you look at the one that's closer to current day. Obviously the one on the right edge is more important. So could we go higher in Apple? Yeah, potentially, but it's also a lot of chop still in the bigger picture. So I'm always a big believer in where stocks are in relation to ranges. So for instance, if you're looking at just a very simple range of this move to this move, and you divide it into thirds like this, well, you can see that you're squarely in the middle of the middle third. It's kind of basically right in the middle of that whole move. Right there. So does that really tell us a whole lot about Apple? No. I mean, do I think it's going to possibly move higher? Yeah, I would. I mean, obviously I do. I actually have a bullish position on it now with weekly options advisory. We sold some 121 puts this week, which went to zero, obviously, choosing them because they were underneath the trend line. And we're actually long going into January 22nd, I believe, for that expiry. We're long the 130, 135, 140 butterfly. So far, so good. And that's the trade with Apple. I would basically just continue to watch the trend line here. Any weakness is viable in this stock. The story is obviously phenomenal. 5G is definitely happening. There's a huge upgrade cycle, et cetera, et cetera. So imagine if it was to pull back to the trend line, it would be like such a screaming buy. But I don't know that we get that. If the market stays bullish, you're probably just going to have this dribble like this and move a bit higher. All right, let's get into Amazon. Amazon is one of my favorite day trading stocks, but it's really not been in play as of late for an options play. I haven't really been able to, I've been doing some credit sales using ratio spreads on the downside, which is usually almost always good. It's a trade I like to rinse repeat almost every week. But there hasn't been much activity in Amazon for like a classic directional play or risk reversal or something like that. And the reason is because, look, and this is on the daily, not on the weekly, but part of the reason is look at how congested this is. Look at the last 3 days of the week. It's huge dojis, like topping tail, which would make you think, okay, 2 big tails in a row, you're going to go down. And this is a perfect example of why I don't pay attention to this pattern on the daily, as I was saying, right? That I only really look at tails on the weekly because, look, it's worthless. You have a shadow. You have two shadows to the upside. So you would think, okay, wow, with this pattern, this thing's really going to tank. And then it doesn't. It doesn't even make it anywhere near the low of the first one, and barely makes it below the low of the second one. So it's really not telling you much. And it's kind of riding a very short-term trend line here, very, very short-term, which is important to note, because the real ascending trend line in Amazon is really this one, is the lower trend line here. And then I'm also a big believer in this support here because it's got multiple touches. I don't know if we're going here or not, but this is actually the level that I've been selling puts against in ratio spread, which has been working out well. If you hang out with me next week on the free trial to the weekly options, and again, that link is right there, free.shadowtrader.net. Just put that in your browser. No HTTP or no www, just like that. That could be something that we'll be looking at, is doing a very wide ratio spread for credit down there. But again, as far as directional play, it really needs to get in gear for me to get excited and do something. And then obviously the move is to here. You'd be playing against the high 3300s as your target. You'd be looking at the way that this top trend line or channel line, however you want to look at it, the top of this wedge here is going to be your target. So you're going to be looking around, basically targeting something around the 3380. So if we get some sort of wake up in Amazon next week, for instance, and again, alluding to the free trial, what would I be looking to do? I'd be looking to be short puts somewhere, and I'd find some sort of structure that would exploit a move to this level. So this is actually lower than I thought. It's really going to come in around 3350 to 3360, right? So for instance, Amazon butterflies tend to trade relatively cheap because there's a lot of good volatility all up and down the chain, right? They've got juice, so to speak, all the way up there and all the way down there. So I'd be looking at some sort of a wide butterfly with a mid strike around 3350, and I would probably be financing it with some sort of a put structure at the same time. So again, those are the types of things that I look at. But right now, there's really no purpose in doing that because it just hasn't woken up at all. All right, let's continue on with this Fangman Plus T. Let's look at Netflix. This is like the king of stocks that is doing absolutely nothing. I mean, it's a similar 3-day pattern to Amazon that hasn't moved, but it's way worse than Amazon because it's in the middle of a very large range. Like, look at how you make this high here, and then you fail way below it, and then you retest the all-time high, which is interesting that this move here didn't make it, kind of faked everybody out. And then you find support at this key area, which is obviously a strong support. And now, where are you in relation to this whole range? Again, similar to what I was showing you with Apple. If you cut it and you say that's a third, and you say that's a third, aha, you're in the middle third. And the middle third is really not a good place to be, right? I think that's an old AC/DC song. Middle third is a bad place to be, or something like that. So it's just not... it's really not amenable to any sort of a trade right now. Let's take a look at Google. I came really close to pulling the trigger on Friday on a bullish trade on this, and I can't even say that I didn't. What the reason was I didn't do it. I mean, sometimes you just get too busy or you just fake yourself out or whatever. But I like this break here, and I think what Google is showing us is that it wants to retest the high at the 1850. And potentially higher, really. I mean, it could actually move a bit higher if you think about it. You could easily like draw a channel by connecting these like this, and that's potentially where it could go, which puts the stock closer to 19. So this may also be a situation where I may do some sort of a structure, targeting this area. And I'm kind of bullish on all these stocks because they are reporting soon. The biggest day is going to be January 27th, just so you know. That day is important. I want you to write that day down, 1/27/21, because on that particular day, and on the 28th, I should say, those 2 days are really important because between those 2 days, you've got Facebook, Apple, Tesla, Microsoft, and Amazon all reporting within those 2 days. The first 4 on the 27th and Amazon on the 28th. So just keep that in mind. So here we are. I'm speaking to you on January 8th. Generally, these stocks tend to be bullish in the run up towards that. So it's something to think about, some of these risk reversal or bullish structures as you're headed in that direction. Microsoft doing nothing as usual. It's really kind of a quiet stock. It doesn't really do all that much. But again, you want to look at the range. right? Where are we here? Nothing, right? Very, very close to the midline of the range. The problem with Microsoft is there's not really enough juice to set anything up on the opposing ends. Really, when I say juice, means that I'd be looking for what credits I could sell at the 230 or the 200 level so that I could create some sort of a more neutral structure, so to speak, like a ratio spread or broken wing butterfly, or maybe a 132, unbalanced butterfly or something like that. But it's just the stock's not volatile enough really to have a lot of juice like at the extremes. So just something to think about. All right, let's look at Nvidia, right? Well, I believe that's last but not least. I think we've looked at all of them. Oh, we're going to get into Tesla obviously as well, because it is Fangman plus T. Also going nowhere fast, so not a lot to do here. Classic double top here. If this consolidation here was to break on an increase in volume, like probably set an alert here for the high. Whatever these highs are here, I would set an alert. See this high right here? That high is 549.25, so it's right up against that 550. Bam. So set an alert for yourself that if the stock trades 550 and then you quickly want to just go down to like a 5 and 15 minute chart or whatever, and see if there's an increase in volume on that day. See if it's trading like higher than average volume on the breakout as more people are joining the party. Then what you want to do is set up a structure that could push it up to the 580 or whatever this resistance point is, which could be interesting. All right, last but not least, Tesla. The stock's absolutely on fire. It's been great for day trading, but there's just nothing you can do with it for this level. The options on the call side are so pumped up. This is interesting that in weekly options advisory today on Friday, we bought a 980, 1000, 1020 butterfly on the call side for 60 cents. Now that's interesting because I don't know for sure if the stock's going to 1,000 next week, but I just loved that the options were so pumped up, because as options get more pumped up, butterflies get very cheap because there's all kinds of credit all through the chain, and all the strikes going all the way up are very expensive. So to me, to get a risk reward that was far greater than 20 to 1, right? Think about it, it was 60 cents. It's greater than 30 to 1. All right, think about it. It's over 30 to 1 risk reward in terms of what the max value is, $20. Now, obviously, you're not going to get anywhere near $20, but the thing is that the 980s are so rich right now, going up towards that 1,000, that even if this fails next week and falls down, it's not going to be difficult to sell off portions of that butterfly, to hack it up in some way and get 60 cents back. Because right now you're talking like, $10, $15 for some portions of this particular spread. So that's another way that I look at things, is what kind of spread can I put on that I can then sell off piecemeal to get debits back in case my theory fails, meaning in case my idea about direction or where I think it's going to go doesn't pan out. Can I salvage things from that spread to basically get my cost back down to zero, which turns a losing trade into a break-even trade? And the more losing trades that you can turn into break-even trades, the better you're going to be over time. And that's all for this week. Thank you, as always, for spending a little bit of your weekend with me. So remember, all next week, free trial. The link is down below. You don't need www or HTTP or HTTPS. It's literally exactly what you see on your screen. Just type it as you see it, free.shadowtrader.net, and I really hope to see you there. As far as the market's concerned, new all-time highs, that's where we're at. I don't really see any stronger sellers on the horizon. Obviously, those can develop at any time they like. If you recall from a past video before this one, I was saying that I don't really see the market as that overextended on the upside at this point. So there's no reason why this can't keep going on. We probably would like to see some sector rotation as we go. And that's why I spent a little bit of time today on those sector charts, because what really keeps bull markets running for longer periods of time is when the baton gets passed, is when you have this sort of sector rotation. If it's just very narrow and only one grouping is really running the show and nobody else gets any love, then, you know, that doesn't really go as far. But it becomes more broad when they pass it off back and forth. So we'll see if, you know, that happens over the next couple of weeks. But there's absolutely no reason why this can't continue, at least throughout the end of January. So we shall see. All right. Fangman plus T, I talked about that. Remember, a lot of those stocks are going to start to report soon. They're usually bullish going into it. So be aware of that. And as far as those stocks are concerned, that's the sandbox that I like to play in the most. I'm really most familiar with those names. Those of you that are already subscribed to my weekly options advisory, you know that a lot of the trades usually come from those names. So don't be surprised if you take the free trial with the link down below, that you may see some options trades next week in a lot of those names. So I look forward to sharing all of that with you. All right. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.